Hello, welcome back to Learn Oikonomia. In this video also we would be discussing from some sample questions for UGC NET exam. So the first question is, in India, the price of petroleum products has been deregulated mainly to dash. This question tells about the reason behind deregulation of price of petrol or petroleum products. We have to find the answer, and the options are: option A, reduce the burden of subsidies given to oil companies; option B, discourage the exploration of oil reserves in the country; option C, discourage the demand for private vehicles; and option D, curb the use of black money in the economy. We have to understand that uh, when there was a sharp decline in crude oil price, this has helped the government to deregulate the price of diesel, and this reduced a huge burden of subsidy on the exchequer. India, if not a producing giant of petrol or petroleum products, it is certainly a refining hub where it refines and markets around 220 metric million tons of petroleum products. After this, we have to understand that around 160 MMT is used for domestic consumption and the rest is used for exports. Therefore, the drop in the price of petrol or petroleum products would be considered to be an asset for the Indian economy or Indian refineries and the oil marketing companies. So, in this question, the right answer is option A, to reduce the burden of subsidies given to the oil companies. Second is a direct question. Corporation tax is imposed by whom? State government, central government, local government, and state as well as central government. It is option B, central government. You have to understand that corporation tax is a kind of direct tax. That means that the impact as well as the incidence would be falling on the same party. That's it. Another question with respect to corporation tax. Corporation tax or corporate tax in India is levied on income of a company. Which of the following does not include corporation tax? Option A, profit from business; option B, capital gain; option C, interest on securities; and option D, sale proceed of asset. We have to understand that the income of a company would come under several heads. It can be profit or gains from business. It can be income from property, or it can be capital gains, or it can be income from other sources. So, in this question, the right option is option D, sale proceeds of asset. The question is asked does not include. So, it is sales proceeds from assets. Next question, which among the following is not a source of tax revenue for the central government in India? Tax revenue means the revenue which the government receives from its tax collection. So here the options are income tax, custom duties, service tax, and motor vehicle tax. And the right answer is motor vehicle tax, option D. And it is not a form of tax revenue to the central government, whereas it is a type of revenue of the state government. It is a state tax. Which of the following statements about Krishi Kalyan cess is correct or are correct? It is calculated in the same way as the service tax. The current rate is 0.50 and it is similar to KSS, that is Krishi Kalyan surcharge. The right answer here is option 1 and 2 only, that is option B. It is calculated in the same way as service tax and the current rate is 0.50. And this surcharge, with respect to KK surcharge or Krishi Kalyan surcharge, it is the additional percentage of tax which domestic taxpayers need to pay when declaring undisclosed income by paying a tax at rupees 30%. Next is a very direct question. Who suggested an imposition of expenditure tax in India for the first time? Kaleski, Calder, Chellaya, and Gautam Mathur. The right answer is CalDER, that is option B, and it was imposed, or the expenditure tax was imposed for the first time in India in 1956 as a part of the suggestion given by CalDER. Mod VAT is related to what? Excise duty, value added tax, wealth tax, and income tax. The right answer is option B, value added tax. Mod VAT is considered to be modified value added tax, thus it is related to value added tax. Now, which one of the following is not a tax or duty levied by the government of India? I mean, it is not a duty levied by the central government. Service tax, education tax, custom duty, and toll tax. It is the toll tax that is considered to be a main source of revenue for the state government. Thus, it is not the central government that issues toll tax. So, the right answer is option D. Now, with a view to redress the grievances of taxpayers speedily, Income Tax Department has started a new electronic platform. And what is it? E-grievances, EIT, E-Bharat, and E-Nirvan. The right answer is option D, E-Nirvan. And this is actually put forward in order to fast track the taxpayer grievances and ensure easy resolution of their complaints. Consider the following tax: corporation tax, income tax, service tax, and union excise duties. You have to uh, go for the decreasing order of its importance to the central government's gross tax revenue. Okay, and you can see that as per the union budget of 2016-17, the share of taxes where corporation tax was dominating, after that income tax, then service tax, and then union excise duty. So here the right answer is option A, 1, 2, 4, and 3. Next question. If sales tax on a commodity is raised, but the revenue earned through its sales decrease sharply, which of the following would be correct? A is price elasticity of demand for it as unity. It must be an, or B is it must be an essential good. C, price elasticity of demand for it is high, and D, price elasticity of demand for it is low. Correct answer is option C, price elasticity of demand for it is high. You have to see that price elasticity, that is the responsiveness to the change in the to the responsiveness of quantity demanded of a commodity to change in its price. So here this for a good depends on the proportion of income or the income the buyers of the commodity spend on the particular good. So therefore you can see that if sales tax on a commodity, if it is increased, but the revenue earned through such a sales tax decreases sharply, the price elasticity of demand for commodity would be high. Which of the following tax would fall under the state list of Indian Constitution? Entertainment tax, luxury tax, stamp duty, and custom duty. The right answer is option 1 and 2, that is option A, entertainment tax and luxury tax. Whereas in the case of export duty and customs duty, these are, and import duty are levied by the central government. Which of the following tax is levied by the union and is collected and appropriated by states? So if you look into the articles 268 of the Indian Constitution, you can see the stamp duties are mentioned in the union list, and this shall be levied by the government of India, but this is collected as and appropriated by the states. So the right answer here is option A, stamp duties. What is or are the most likely advantages of implementing goods and service tax? It will replace multiple taxes collected by multiple authorities and will create a single market. It will drastically reduce current account deficit and will enable to increase foreign exchange reserve. It will enormously increase the growth and size of Indian economy and will enable it to overtake China in the future. You have to understand that export would become zero rated under GST. So statement 2 as well as statement 3, these are not correct. If the examiner had used a moderate words like GST would help, but he or she has used extreme words, then you have to understand that GST is unlikely to drastically reduce current account deficit. And this is because crude oil import and opaque cartel that manipulate its prices. If you see, you can understand that GST is unlikely to enormously increase size of our economy. And as a result, we cannot overtake China in the near future because China, it is keeping our currency undervalued against dollar. Hence, statement 2 and 3 are wrong, and we are just left with option A, that is sentence 1. It will replace multiple taxes collected by multiple authorities and will create a single market in India. So option A is correct. Statement 1 only is correct. With a reference to Prohibition of Benami Property Transaction Act of 1988, you have to consider the following statements. A property transaction is not treated as a Benami transaction if the owner of such a property is not aware of that particular transaction. Then properties held Benami are liable for confiscation by the government. The Act provides for 3 authorities for investigations but does not provide any appellate mechanism. The right answer is option 2. That option B, that is only sentence true. 2. Act provides an appellate tribunal and they are required to finish case within 1 year. I mean, these uh, properties are held in Benami are liable for confiscation by the government. That's it. Thank you for watching. Please like, share, and subscribe to this channel for more videos. You can be a part of my Telegram group and Telegram channel to discuss your doubts. I'll be providing the links of the same in the description box. Thank you.